Now, indicators are one of the best way to understand what's happening from a technical perspective. So just bring out a chart as normal on MT4, put it on a blank chart, just to get a little bit of colour here. What we're trying to understand is, in this particular instance, what this market in here, the euro dollar, is trying to achieve on the time frame. So the whole point of what we're going to talk about, the profiles and the different templates of how you arrange these indicators and these layouts, is to get an idea of what the market is trying to achieve. So we do that by trying to find out what support and resistance, what the indicators and oscillators tell us. So this particular market is moving down, but I guess what we're trying to find out when it's overbought or oversold, where support and resistance are going to be found. And all these things can be done by looking at the candlesticks alone, going back through the previous time frames to find out where previous support and resistance was. And again, it becomes very, very difficult if we look at the weekly lows on the euro dollar. So you have to go, way back in the charts to figure out where the low point was. So the whole point of why I've put together my indicators is to save you time and effort. So just to give you a brief example, if you put on my custom indicators, we'll start with the iView, which is basically support and resistance levels, and it gives you an idea what the market's trying to achieve based upon previous movements within the market. So this is a weekly, so it becomes quite, not messy, but you get a lot of information on the weeklies because you get a bigger view. I mean, this is going way back to 2013, so you get a lot of levels in play of where the market has been and where it can go. So we see the market here, the euro dollar's broken, this monthly level back here. So if it continues to go down, it's only going to go previously back to where it's been before, which is down to here to 1.16390, which is a previous monthly level of support. Now, you can go through the charts yourself and pick out levels of support and resistance, but the whole point is what looks like support and resistance to you. If it doesn't look the same way to the market, you don't get the benefit of that self-fulfilling prophecy. So what you need to do is understand how the market calculates previous support and resistance. And these are based upon all the indicators we can go through. So just for an example, if we try and put some indicators on, which is just this symbol here, the pound sign and the green cross, and we go to trend, we have all these different ones: Bollinger Bands, envelopes, moving average, parabolic ZAR. We have oscillators, which are just range bound between 0 and 1 and 0 and 100. We have bear power, bull power, demarker. How many of these indicators do you ever actually use? One of the biggest questions I get is what indicators do I use and on what time frames? Well, I use all the indicators and all the time frames. But again, how do you put that onto a chart? If we start to put, every indicator that we want onto a chart, all of a sudden, the chart's going to get very, very messy very, very quickly. We're not going to actually get any, any real value from what, the markets are trying to tell us. Because if we just put, that's just an example of 4 oscillators already. What really is the market telling us? The parabolic ZARs maybe saying that we're going down. That's fine. We're trading below the envelopes. We've got this Gator index. Does that mean we're now overbought here and the market is ready to turn? To be honest, after doing these things for so long, there's only certain things that work. Okay, so the whole point of why I've put these indicators together is they're a combination of things that I know people look at because I've used them for over a decade and because I've taught thousands of people to use them. So I know they work. And it's just like anything. You can go out and try and find your own slant on these things. And iView is not meant to take away your trading ability. What it's meant to do is give you a framework. So if we just start with a basic charting template of the hourly, then when we put that back into the hourly charts, we start to see what we've got. So all the things we need to look at, moving average, well, that's here. Okay, your moving average is part of your Bollinger Band. So instead of having a random moving average or moving averages cross, you've got a 20 period moving average with 20 period Bollinger Bands, which is just 2 standard deviations around the moving average. So that's something you need to look at, because when we're outside it, on the hourly, the market needs to get back to the opposite boundary. This happens time and time again. Throughout the charts, when we break out, the market eventually gets back to the moving average. It works on the high side and the low side. It just works. Okay, so Bollinger Band's very, very important. The green and red lines are Fibonacci. So when we find points of resistance on the red area and we close below the 50%, the market goes down to these green areas. Okay, and once we start trading well below the 423 and can't draw new Fibonacci's, that's a very, very bearish signal. So we know the euro dollar is going to continue to go down until we see a retracement above these Bollinger Bands. Okay, then everything else is the levels we talked about, these previous levels of support and resistance, the monthlies, the weeklies, the dailies, all previously with the market as found resistance. So these lines do redraw as the chart moves to the right. So you're constantly getting an idea of where the market's going to find support and resistance. And as I said, once you've found these things, you can drag any product you want into this framework and it will tell you. So we're ranging, closing below significant weekly and monthly support, breaking outside the lower support line. So if we could break these lower Bollinger Bands, the pound against the dollar, it's got potentially another 270 ticks to go down on the low side. Doesn't mean you have to make all of them 270 ticks. You just know if you go short over a break of these Bollinger Bands, you've got a good chance of catching the bottom of the market. So all these indicators that are available on iView charts are meant to enhance. So we have the bias. Okay, so the bias is a way of understanding what type of trade you should be looking for. Okay, so we've got a potential buy. So it's not a buy. Okay, here's a buy and the market goes up. Okay, the grey areas are meant to say stay out and no trade, but it's amalgamation of the indicators and no work. It isn't necessarily the RSI that can be manipulated, because everybody knows the boundary of RSI is 1730 for overbought and oversold. It's an amalgamation of lots of different indicators to try and give you that edge. Now all indicators are lagging, so I can't tell you this is the perfect potential buy now. You have to wait till it goes to a buy or a sell. Okay, and then even then it's going to be lagging because there's no indicator that predicts the future. It just gives you a better idea. So you've got the bias, you've got an idea what the market's trying to achieve. Then we have the Bollinger Scenarios. Okay, yet again another clear indicator giving you an idea when we close below that 50%. These green targets are where you need to buy back. So again, another great trade back here. The fact that we're below the 423 again means we're very negative in the pound right now. Other indicators you can use is the newsreader. Again, it's all customizable. You can just include pieces of news you want, different impacts, and this means that we're tying in the 20% fundamental moves with the 80% technicals. So we've got an idea in 2 hours 16 minutes, a high impact piece of employment is going to come out. So the ADP, which is a precursor to non-farm payroll. Then after that we've got the trade balance. So this is the idea of amalgamating the 80% technical, the 20% fundamental, all the things that I know move the market. So already we know we've got time to wait 2 hours 16 till some big data that could affect the pound versus the dollar. And we know we're bearish because we're below here, but we're looking for potential buys to turn into buys. So we're looking for low points in the chart to buy back. So if we then put the iView levels on, we then get an idea if the market breaks down where we can find potential support. So support has already been hit down here in the pivots, but below that the market hasn't found any real major support until these monthly levels. So if we get a very, very weak non-farm payroll, then maybe we see the market spike up because the pound's going to gain strength against the dollar. If we see a very, very weak ADP, then the market's going to move down and get towards these levels of support down here. So basically, you've got an idea if the market can move up 100 ticks or 141 ticks, or move down 280 ticks. So you're probably not going to make that in 1 hourly candle, or you're not going to make that in probably a days worth of trading. But you can still get short knowing where the market can eventually get to, or get long and understand where the market can move in relation to the Bollinger Bands and the different levels of support and resistance that the iView charts give you. So once you've put in these things together, all of a sudden you can see how your charts become a little bit more interactive. We start with a normal chart from MT4, and it's just like that. It just is very, very simple, very, very basics. If you tile that vertically, the comparison, well, there is no comparison. This chart on the right doesn't tell you any data whatsoever. Yeah, whereas your iView charts with all the different indicators you can use gives you a wealth of information. So by using the indicators and putting them into your own templates, or using my templates to colour a chart, all of a sudden, you get a lot more information than you previously would. And as we're going to talk about in different videos, you can build your own templates, you can build your own profiles in order to see whatever you want, but the underlying value you get from the indicators is there. So you can really kind of take this as far as you want. Everything that I have put together from iView is for a reason. I did supply a lot of templates and a lot of profiles, but people were getting confused. So I've just given you the absolute framework, that you can use. So if you're using a 15-minute chart, you know that you can go and put a 15-minute chart template on, which is all the indicators you will need, okay, for that particular time frame. And then again, if you look at the hourly chart, then what you're trying to do is build up a picture of what can happen on the 15-minute chart with hourly framework. So all these levels and lines will be drawn through. You don't necessarily get the Fibonacci, but if you want to add the Fibonacci, you can. All you do is go back to your custom, add the Bollinger breakouts, and then you get the Fibonacci back on the 15 minutes. So if you want to scroll through to the 5-minute chart, you can see how the Fibonacci is acting again. Yet again in the 5 minutes, yeah, the 50% is acting as resistance, and we can buy back at these. So again, there are some setup videos you can do, but I would generally look at the daily, the hourly, and the 15-minute chart to get an idea of the same product, what you're trying to do, and that could be a profile, okay, the profile that you look and just drag different products in. Because once you've got this framework in play, again, if you dragged another chart in here, I mean, again, this is just how quick you can set out these charts. If we do, that will now be our daily, that'll be our hourly, that'll be our 15-minute. So put the templates on. 15-minute chart, hourly chart, daily chart. Okay, what you're trying to figure out is, a gap in the market here, market's still going down. Find resistance points on the moving average or below the upper Bollinger Band. We know we're well below the Fibonacci's here. Then try and find a part in the market where we're going to find some short-term breaks. So we're looking to sell a break of 1.51062. Yeah, and again, that'll be probably coincide with a break of the lower Bollinger Band to hit these lower levels of support on the dailies. So again, looking down, looking for sells, 15-minute for your entry. Once you've done that, you can drag any product you want and get the same view. Okay? And all your levels are here, yeah, in all your points of attraction of where the market's going to find support and resistance, and where the market, again, can move to within certain boundaries. So that's the indicators. There are different indicators, but everything is prefixed. You have bias, the Bollingers, a grey area zone, when to trade, when not to trade. The iView window, iView levels, the light, which is an explanation of how the Fibonacci's work, the newsreader, which we went through, and the trade view, which again is probably one of the most useful indicators we've got. This shows you every product that your MT4 Market Watch does, okay, and you can customize it however you want. If you want to search by alphabetical symbols, you can. If you want to search by Fibonacci, okay, that key 50% level that we knew we closed below, you can. And it gives you an idea of the bias and what type of trade you're looking for. So all the information you'll need. So if you want to take, a view on from the bias, all the no trades, potential buys. Okay, so we're looking for a breakout, something around the 50%. There we go. The Hong Kong stock market, click on that. The chart automatically opens, so you can see we're ready for a breakout again. So we either close above or below that 50% hourly retracement. Then we know resistance, we know support, where to buy it back. So I mean, that is the power of iView. So it's going to take a little time to put the different indicators you want in the way you want, but that's why we have the templates. All the different time templates are set up for you. But again, it's meant to be a tool for you to learn. As I said, trading takes about a year for you to chart consistently. That's why I offer big discounts for the yearly packages. So what you have to do is get used to using a framework. So if you want to trade any particular product, you have to get used to using it in these different ways by using the daily, hourly, 15 minutes. But then you can progress, bring in your own profile, maybe look at everything on dailies, different FX pairs on hourlies or just on 15 minutes to try and find your own correlation. But the standard framework is here for you. Once you've got that, you can improve upon it and make your trading better.